Bitcoin and the crypto market as a whole are looking bullish at the moment, showing some serious signs that we could have seen a bottom recently, or at least a local bottom, that things might be ready to continue up. But is it too early to call this a new bull market that could be coming, or is this just some sort of bear market relief rally? Now, for the first time really in history, we actually have to take global macro into context when we're looking at crypto markets. We used to be able to just check a chart and they would sort of behave in their own manner. But when we need to figure out what's going on with macro, we bring on the best guest we have, which is Jurrien Timmer, of course, from Fidelity. He's our guy for this exact moment. So I'm excited to have him here and to discuss. You guys don't want to miss this one. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and, I don't know, punch the like button. However you want to hit the like button, you guys can go ahead and do it. Now, sort of, as I mentioned before, we've had this beautiful sort of general bull run of markets for the last, 12 years before the Fed started tightening and becoming more hawkish after a historic time of money printing. And during that time, Bitcoin and crypto sort of had their own bull and bear markets within that, right? Stock market continued to rise, but Bitcoin had a crypto winter for 2018 and 2019. Well, this time, obviously, everything is sort of traveling the same path, much to the dismay of those of us who obviously believe that Bitcoin was a more uncorrelated asset and perhaps could behave differently in exactly times like this, especially when there's historic inflation. But that does not mean that that will not be the case long term or has not been the case when you actually zoom out. But I've got an amazing guest today. You guys have seen him here many times before, obviously, who's the head of global macro at Fidelity. Fidelity, who arguably has been the institution that has been the most bullish and has adopted crypto the most since the very beginning, way ahead of everyone else. So definitely the best person we have to offer us some context. Jurrien, how are you today?
Good morning. Nice to see you, Scott.
Nice to see you as well. So listen, we have, as I sort of touched on, we have Bitcoin almost back to 24,000. Listen, it feels very low, but we were at 17,500 a month ago, and Ethereum is almost doubled, right? So this is actually a significant rally.
Yes, and as you point out, the macro does matter, right? I mean, in a perfect world, Bitcoin would follow its adoption curve, up and to the right and do its own thing and be completely idiosyncratic and uncorrelated from everything else. But clearly over the past, several years, we've seen that that's not the case, right? So a very ample liquidity environment in response to the pandemic, I think really facilitated the narrative that in a world of super easy money and rampant, money supply growth, having a hard store value is important, and gold falls into that category. But I think Bitcoin does as well, or at least it's aspiring to fall into that category, and that narrative worked. And I think for kind of the public in terms of adoption, whether it's institutions or individual investors, having a friendly narrative or supportive narrative, I think it helps move the adoption along its way. But I think that can also go in the other direction. And of course, as we all know, the Fed has been draining liquidity at a very, very rapid pace. We went from minus 2% on the TIPS real rate 6 months ago to now plus 1%, and that's just using the TIPS market. And so that's been a rapid draining of liquidity, raising rates, quantitative tightening, fiscal drag, right? We didn't get a repeat of the fiscal stimulus or the CARES Act, nor many people would argue should we have gotten it. But on a rate of change basis, that becomes that fiscal stimulus becomes fiscal drag. And so you add, so basically that entire process of massive fiscal, monetary, coordinated policy response to COVID has turned around certainly a lot faster than I thought. I thought we were going to be many years out of easy money, and that would be kind of a secular narrative booster for hard assets in general. So crypto, Bitcoin especially, I mean, most of my work is on Bitcoin, but we're seeing that Bitcoin is not immune from that, and especially as you have these boom bust periods where a lot of speculative money and a lot of leverage comes into the system, that leverage will drain out as well. And we saw, and it's not unique to crypto; it's unique to anything with leverage. We saw that in the meme stocks, back a year and a half ago. So the liquidity tide is going back out, and it's going back out pretty rapidly, and it's taken basically everything with it. But the glass half full, of course, is that has left Bitcoin at around 20,000, 17,000 a few weeks ago, 24,000 today. And for the patient long-term investors who still have some powder dry, which of course is a necessary ingredient.
That's the big if, right?
It's an opportunity, because if the adoption curve continues as it has, and we can talk about which curve is the right kind of proxy to use, because I think the slope of that curve is going to be the driver of Bitcoin's price. Not so much stock to flow anymore. I think it was a good model back in its day, but I think going forward, it's all going to be about the slope of the S curve. But being able to kind of pay attention to the fundamentals, which is about the adoption of the network, when you have a sense that all the leverage has been flushed out, the tree has been shaken of all the leverage, I think is a real opportunity for long-term investors.
What I find interesting is that I won't say necessarily it's cognitive dissonance, but obviously as Bitcoiners, we sort of obviously wanted to hedge against inflation. We don't like money printing. We don't like inflation. But when all of that turned off, all of a sudden the price went down. And now you sort of seeing people cheering for a easy money environment coming back. Like you said, right? We talk about Fed tightening, but maybe Q4, they start to loosen up again and then Bitcoin will go up. It's kind of like we want the price to go up, which requires a poor inflationary environment.
Yeah. I mean, Bitcoin is, I see it as, as an aspiring asset class, but really more as aspiring money, right? Money is a store of value. It's a medium of exchange. And obviously it's been too volatile to be a medium of exchange, at least in terms of, going to Starbucks and buying your coffee with. And as a store of value, it's trying to prove itself, right? And Bitcoin is so unique, like gold is a store of value. It has several thousand years of track record to prove that it is, but gold is one-dimensional. It's really just that and nothing else. Bitcoin has, of course, the scarcity. It has a lot of the qualities of money, right? You can exchange it, you can move it around, you can store it, but it's still trying to prove itself. And at the same time, it has this powerful network curve, which is very unique. Like I think Bitcoin is probably the most unique asset class or aspiring asset class in the world, because it has both this built-in supply scarcity, even more scarce than gold, right? Gold is scarce, but gold's production is still about 1% per year, and that really doesn't change very much. Whereas Bitcoin, we know that cap is coming at some point, but Bitcoin has this exponential growth thing going on, which can bring in all that speculation and leverage when the price goes up. And then inevitably that all gets flushed out when the price goes down. And gold doesn't really have that, because gold is just a one-trick pony. And Bitcoin is kind of juggling those two aspects of supply and demand. And that's why it can look like the NASDAQ at times, or it can look like gold at other times. And that's been one of the challenges, I think, for kind of the mainstream adoption, is like, make up your mind, what are you going to be,
Right. Well, I think, for now, like you said, when you're early, that's challenging, but that becomes, I would say, a huge advantage moving forward. There's a reason people like to say the internet of value or the internet of money or those sort of descriptors for Bitcoin, because you not only have the qualities, like you said, of gold, but you can also look at, as you said, maybe the value is really in the adoption, the network effects, the curve that's more like the adoption of the internet in the 90s or early 2000 than it is obviously like a hard asset. Really,
Yes.
it makes it very interesting.
Yeah, yeah, and I think from here on, I've looked at a lot of, I've done a lot of research on historical adoption curves, S curves, whether it's the railroads in the 1800s or TVs in households in the 1950s, or mobile phones has been the one that I've used the most, or just the internet adoption curve in the 2000s. They all are the same curve, right? They're all S curves, but they have different slopes, and some mature faster than others, and others keep going longer. And I think the first 12 years, 13 years of Bitcoin, I think were explained well by any of those curves, because they all start vertical, right? And it has been explained well by the stock to flow model. But I think going forward, after Bitcoin has kind of started to mature along that curve, again, we're 12, 13 years in, I think the ongoing slope, or the rate of adoption from here, is going to drive all of the price action. It's going to move up and down along those lines, but I think you have a solid two-way market now, right? Since 2018, we have a futures market. So if the price were to go nuts relative to what an investor might conclude is a more modest adoption curve, there's going to be sellers coming in, because it's going to be expensive. It's like a stock trading at a really high PE. But conversely, like right now at 24,000 or so, even my more conservative adoption curve models, suggest that it's going to be a lot higher and kind of up and to the right. I mean, they're just models, but still. So an investor can come in here and at 24,000 and say it's cheap. Like it was very hard to say that something was cheap 5 years ago. All you knew was that the price was high or low, but there was no valuation metric around it, as far as I can tell. But now with these fundamental models, whether it's supply or demand or a combination of the two, we can kind of anchor what the actual fair value range should be for Bitcoin. And then when it trades way below or way above, you can actually make a decision saying it's rich or cheap, rather than just say the price is high or low.
Right, good old fashioned mean reversion, right? It's a tale as old as time. And you're obviously on the front lines of, I would say, institutional adoption, for lack of a better term, of Bitcoin. We have this bear market, no question, and it's an everything bear market. I hate when people talk about it being a crypto winter, when we're just obviously riding alongside everything else.
It's just winter period.
That's right. It's just winter. But have you seen a slowdown or less interest, or sort of more questions coming from other institutions as to whether they still want to be a part of this asset class? I mean, I have friends on Wall Street, obviously, and they're screaming it's dead, and that everybody there is saying crypto's not interesting anymore, it's over. But I have a feeling that's not really what you're seeing.
No, it's I think it's important to make the distinction here between the tokens themselves and the actual blockchain network, right? So my guess is that there's a lot of institutional activity going on, but a lot of it actually is just on the blockchain development and technology, kind of the venture capital side, not necessarily.
That's where the money's come in. I mean, for the last year and a half, it's been mean, tens of billions of dollars of VC without people adding Bitcoin to their balance sheets. So
and it's excuse me, and it's one way to overcome the volatility of having a token that's just always moving around. But I'm sure, I'm sure the interest in Bitcoin remains as large as it has been. It is, obviously the leader of the pack, as is Ethereum. But again, Ethereum, I would put in a different spot on the 60-40. I would put that more on a growthy venture capital kind of side, where Bitcoin, I think, is aspiring to compete with gold as a store of value, as money. And I think that puts it it makes it a different asset class. And that means that it goes somewhere differently on the 60-40. So I think the interest is still there, but 2 years ago, as the price was going way up, I think there was more of an urgency, which is, we can call it FOMO, but it can also just be that if you're the CIO of a pension fund and your board is breathing down your neck saying, what is this Bitcoin stuff? I need to know more. Like, you get a lot of inquiries. And when that reverses, I think everyone is like, okay, maybe it was nothing, until it starts to move again. So my guess is that we'll see more interest. But I think we're already, the interest hasn't waned. I think just the urgency in the interest kind of waxes and wanes. But I think for institutional investors who are going to put Bitcoin itself into a portfolio, the fact that we have yet another large drawdown and that volatility remains high, that is going to remain a hurdle. Not because,
especially without an ETF.
And if you size the exposure correctly, right? If it's a small bet in an otherwise, let's say 60-40 portfolio, you can you can handle the volatility, because 1% times a 50 vol is not going to break your portfolio, or 2%, but it does create a portfolio construction challenge, right? Because most institutional investors are going to have an alpha budget, right? They're going to try to generate excess returns of whatever, 100, 200 basis points, and they're going to have a risk budget, a tracking error budget of a couple hundred basis points. If you have one asset class that you own a little bit of, excuse me, that you own a little bit of, but it consumes a lot of your risk budget, a lot of your tracking error, it creates challenges of like, how much do you own and where do you fund it, right? If it comes out of the 40, out of the bond side, and the volatility is 10 times as high, it's different than if it comes out of the venture capital side.
Right.
So I think these are going to be the challenges. I think by now, a lot of investors, institutional or otherwise, have decided whether they are interested or not. Then it's a question of how, and you mentioned ETF, it can be other ways. And then it's a question of how much. And I think that's going to be the next big conversation. Is it 5%? Is it 1%? Is it 0.5%? Like I think that's where I'm spending my time, trying to like think through all of the steps that an institutional investor at least should go through.
Perhaps the most interesting point there is that they're still thinking of it from the 60-40 perspective, and one could clearly argue that the 60-40 portfolio is dead, or should be dead or dying.
Well, it certainly has been over the past 6-7 months. Bonds have not been a reprieve, and even before then, during the pandemic, when yields were low, but inflation was lower, and the Fed was actively repressing nominal rates through quantitative easing, real rates were sharply negative. And so either way you look at it, bonds have not been a good place to be, either because nominal yields were so low, or real rates were negative, or yields are rising, and that produces a loss in a bond portfolio. And certainly the demise, at least for now, of the 60-40 paradigm does call to action kind of the idea of having other, hopefully uncorrelated assets in there, and that remains Bitcoin's challenge. But even gold, right? You can put gold in that category. If you look at strictly at TIPS real yields, and most investors will use the TIPS real yield as the benchmark for valuing gold, based on the sharp reversal from negative to positive real yields. According to my model, gold should be at 1,200 right now, and it's at 1,728. To me, there's a tell there, right? That gold is $500 higher than what a widely accepted valuation model would tell you, and to me, that says something about the need for hard assets, stores of value, in a world where, even though the Fed is tightening rapidly right now, that doesn't mean that a few years from now we're not going to be back to negative real rates, or maybe even yield curve control, which the Bank of Japan.
I was just going to ask you about yield curve control, because that sort of I'm seeing that trickle into the narrative now, that maybe instead of quantitative easing, obviously we saw it in World War II, but more recently, as you were about to say, the Bank of Japan, right? They've just flattened and destroyed the bond market entirely. With yield curve control. So maybe that's what's coming instead of QE, or some combination.
I think if, there's only going to be so much ability for the economy to handle higher interest rates, because we're a highly financialized, economy levered to low rates. And I don't think we're there now, but we could be at a certain point in a place where the Fed just determines that yields are too high, and that we'll see some kind of yield curve control. And it's interesting, when the dollar was weaker, the Bank of Japan could just go at this all day long and defend their rate caps. But now that we have this policy divergence, right, where the Fed is tightening aggressively, the ECB is trying to tighten, but it really can't tighten too much because the periphery, Italy, Spain, those countries, their spreads will widen, and then the ECB might have to go and buy those assets, which would be completely, counterproductive against raising rates. And then the Bank of Japan has decided they're going to defend these yield caps, and we see what's happened to the yen. So it's a really interesting time, and the dollar being at 20-year highs is not a trivial matter.
Yeah, and something you touched on before, and you didn't reference specifically the report, but you guys had that amazing report a couple of months ago, which basically Bitcoin first, which is what you said. Bitcoin has the potential for money, the network effects, everything else is sort of in a venture capital basket, right? That said, we've seen this massive contagion across the Bitcoin market, Luna leading to 3AC, leading to Celsius and Voyager, and so on and so forth. That has obviously depressed the price of Bitcoin because there's been forced sell-offs, it's liquid, etc. So do you think actually that when all of that is settled, that Bitcoin has actually been pushed down artificially because it really has nothing to do with all of that? I mean, Bitcoin is just the asset that's getting sold because of contagion in other parts of the market, right? Yeah, so doesn't that mean that Bitcoin is basically artificially low priced right now, and that has nothing to do with Bitcoin as an asset?
I totally agree with that. We know that at times of stress, all correlations go to one, and we see that correlation not only between Bitcoin and traditional markets, but also Bitcoin and other cryptos. And it kind of makes sense, right? Because if you have a wholesale liquidation sale going on where investors are getting margin calls, people are liquidating, they're trying to raise cash basically to meet margin calls, everything is for sale. And we saw this with gold in the financial crisis, right? Gold was a safe haven. It's like, okay, well, nothing else is working, or the stock market's going down, but my gold is up there, until those final margin calls came, and then you just sell whatever the hell you can because you got to raise funds. And I think Bitcoin, as the no pun intended, the gold standard of the crypto world, it actually makes it a target, right? Because it's like, it is the strongest, which means it commands the highest valuation relative to other digital assets. So it's there. Like, all you have to do, if you own a lot of it and you're getting a margin call somewhere else, is that it becomes low-hanging fruit. And I do think that Bitcoin and other kind of AAA type assets during other financial crises, and you could say this was a financial crisis for the crypto world, right? Those assets become a source of liquidity. But at the end of the day, that means if the selling is indiscriminate and it's just about raising cash and not about Bitcoin's prospects in terms of what it's going to become, then I think that's an opportunity for those of us who are still left standing at the end, right? And that's always the key, and that's why you can't put everything on red, because you need to have something left to buy when it's all over. And so I think that's where Bitcoin is at now, and we'll see. We're kind of building a nice base here, but we've done that before, and it turns out that the floor opens up underneath. But I think at this point, once we've seen these big headlines, and you just mentioned a number of them, that typically happens closer to the end than at the beginning, right? At the beginning, when the thing is cratering, very few people actually know why, but you have kind of the sense that, someone is getting nailed out there, but you don't hear the names. And then towards the end, it's like, okay, yeah, this player just filed for bankruptcy. That kind of makes sense. But that tends to come closer to the end, which gives me a little bit more comfort that maybe that this thing has run its course.
Listen, I mean, I've learned that lesson harder than anyone. I went on Fox Business not once, but twice after Luna and said, wow, it's really impressive how little contagion there's been from this Luna collapse. I was just too early with my opinion, obviously.
But it does feel as the old saying goes, right, what doesn't kill you make you stronger. And I think for Bitcoin, it does solidify its role as the leader of the pack. And so, when Luna goes and Bitcoin goes down, but it survives, that's ultimately that's going to serve it well.
So listen, I know you got to go in about 2 minutes. I would never ask if the bottom is in, and I'm certainly not talking specific to crypto, but do you think it's possible that the stocks have put in a bottom here, that things get better, that most of the bad news in the future is priced in, and that we can either go sideways or eventually rise here? I mean, it seems like the consensus is still more downside, but I'm just not seeing that now.
I think that on the stock market, I think there's a kind of a sense of dread that we're about to go into a recession. Earnings season is going to be a disaster. It's going to be the next shoe to drop. I think that's kind of the vibe I'm getting, and I certainly get it from my Twitter followers as well. So if we don't go into a recession and earnings is not the next shoe to drop, and so far it isn't, but it's early days still. Second quarter earnings season only just started. But if earnings end up being the dog that does not bite, then the market, I think will have a relief rally. And of course, we saw a big one yesterday. But when at the lows we were down 25% for the S&P. A typical recession bear market is good for 35%. A non-recession bear market, so just a valuation haircut, which we've seen a number of over the years, is good for 22%. So we fully satisfied the valuation haircut bear market that comes when the Fed is kind of taking the punch bowl away. But we're only 70% along the way of a full recession bear market. So if that full recession does not happen, then the market is on pretty solid footing here. But it's going to be a shoe that people are going to be there. Everyone's going to be looking around their shoulder to see when that shoe is going to drop, or if that shoe is going to drop. And the yield curve is now slightly inverted. The Fed is going to push rates presumably to about 3.5%, which is only about 100 basis points north of neutral. So it's not really bad, but there's a lot of variables in the air. But I think that's kind of where the markets are at and what they're waiting for.
Well, thank you so much, Jurrien. I really appreciate always you taking the time and your amazing perspective, because I don't think most people can put it in context in the same manner you can. Everyone, you can follow him at it's Jurrien Fidelity, correct?
At
Timmer Fidelity. Did I say Jurrien? Yeah. Oh my gosh, I literally just did the first name, last name. Timmer Fidelity, Jurrien Timmer. Okay, yeah. So we Timmer Fidelity. So thank you once again for joining.
Yeah, thank you.
Everyone, I did the thing. I flipped it. Mott Skelker is my name. If you guys don't know that, that was a pretty rough one. So yeah, always a pleasure to have them. For those of you who have not really done the research or done that deep dive, and just how involved Fidelity has been in crypto markets and just how early, that's a rabbit hole worth going down. I mean, they've been here since the very, very beginning, mining, reporting, creating products. Absolutely incredible what they've done for institutional adoption. I mean, we keep talking about the idea of institutional adoption. I have to imagine at Fidelity, they're just waving their hands and saying, look at us, guys. We've been here a long time. So now obviously it's time for us to move on to some news and to probably some charts. I mean, it's time, I guess, to start looking at charts again. Dogecoin, Bitcoin lead recovery among majors, but some analysts warn of selling pressure. Sure. I mean, this is we get the same headlines every single day. It's funny. I always share in the newsletter sort of Bloomberg's market wrap because it gives us an idea of what to look for the week, where futures are at, how European and Asian markets are trading at any given time. But when you read and the same for crypto markets, when you read the recaps each day and you realize that the financial media has to find something to talk about every day, it's just the same recycled story over again. This is up or this is down. This is maybe why, and it's always the same factors and some strange reaction. More so on global financial markets and stocks. It's so funny. Recession fears have futures down. Well, I mean, it's not like recession fears have changed in the last, 6 or 7 hours since they last reported on it, but it gives them something certainly to talk about. But that's, of course, we have gains, but analysts are warning that there could be some selling. Sure. Great. Obviously. Let's take a look very quickly at the Bitcoin chart, because it's actually getting real here. right? We have the 200 MA, excuse me, let's pull up the weekly. That's the 50. We have the 200 MA here, obviously on the weekly that I've talked about ad nauseum. Sort of as Jurrien and I were talking about, there's always a mean reversion trade sort of when things overshoot their target. And one of the targets that people use for mean reversion, obviously, are these major moving averages on high time frames. The 200 MA has been a huge one for Bitcoin throughout history. I hate to be redundant, but you can see, I mean, this is not a line that's tested often. And as I'm pulling back all the way to 2000, I believe 15 there was the first time it was ever tested, because on Bitstamp, you didn't get a 200 MA until there had obviously already been 200 weeks of price action. But it tested it there, tested it here in 19, tested here in 20, closed slightly below, and the next week was up. Well, now we're making history because we're in the 6th consecutive week, depending on what happens here, at least 5 weeks already closed below that 200 MA. So you would expect that to be a magnet for price here after mean reverting all the way down from 69,000 to that line around 22,600. So it's going to be interesting to see if the week can close above that. Now, going back to the daily where we just were, this is really interesting as well, because the 50 MA here, and listen, you guys know I used to never really talk about MAs very much, certainly in the bull market when things were ripping, because they're not as relevant. But when you have a bear market and you have these major drawdowns and you revert back to these lines or the means, and you get too far above or below in either those markets, those are important lines to look at. But we have not been above the 50 MA since April, right there. April 11th was when we broke down the 50 MA. It was only tested once in that entire time with this one wick, and that was still in April, 10 days later, right? So we've been trading well below that 50 MA there on the daily for months and months and months. Well, yesterday on the first attempt, broke through with a spike in volume over those 2 days. And then if you look at today, where today has bottomed, it's basically a perfect retest as support of that line at the 50 MA. So really interesting to see all of that playing out. Now, of course, when you look at the 4-hour chart, and I mentioned this yesterday, you can see the same thing on the daily. When 28,000 broke, remember we sort of joked we were ranging 28 to 30, 31, something like that, endlessly, it felt like. Well, that obviously broke down. I had drawn the Marge Simpson. We had Bart Simpsons over here and reverse Bart. We were just sort of chopping around in the low 30s and high 20s. But when 28 broke, it was an absolute elevator down to like 22, right? 23, something like that. Straight line. At no point did it stop. Just consistent 4-hour candles all the way down, which means that it left no resistance on the way up. That's a really big problem on the way down, but can be a good thing because this is a vacuum of price action. Now that we're back above all of this, you can literally just, this whole range, you draw it however you want. You can use a box, you could use a big old circle, right? This whole range. Now that we're above it here, after breaking above that, we're now into this area, which is just a hole, right? There's an absolute vacuum left there. Some would call it a gap, but usually gaps is between candles. There's nothing there. There's no resistance. It doesn't mean we'll just levitate 28,000. I would still maybe imagine something like this, but we should be looking at 28,000 or the low 30s now that we've sort of broken through this area. So it would be interesting to see if that can happen. And I think that's definitely possible. Of course, it said that Doge was leading this rally. I haven't looked, but this is a pattern. No, I am looking. We sort of have this inverse head and shoulders that we were seeing on, basically countless altcoins that have already broke out, right? Listen, I'm not encouraging you to trade Doge. I think that this is still a massively overvalued asset, to be quite frank. But looking at altcoin charts does give us an idea of what's happening with the market. Well, this is prepared, working on a neckline breakout right there if it can get above this line. And then we can start talking about much higher moves for Doge. If you are, by the way, trading in inverse head and shoulders, have fun. But usually you take the shoulder down to the head and extrapolate that. So that'll give you a target around 14 cents, depending on where the breakout actually happens. Bottom line, though, is that alts have been showing these major bottoming patterns. You could listen, if it's not an inverse head and shoulders, as I talked about yesterday, it's certainly a broadening, descending, broadening wedge, right? Which would give a target back up here around, 9 cents, something like that. Still some nice moves to be had. But listen, it's Doge. Whatever. Doge probably actually will trade closer to the chart than most assets because it has no fundamental value. So I guess we can talk about the technicals more there. Moving on. Lunatic Mike Novogratz. Crypto industry looks like a bunch of idiots. Oh, pot. I love Mike Novogratz, by the way. Love him. But this is a bit of a case of the pot calling the kettle black, right? Look, the guy has a tattoo of Luna on his arm and is talking about how the crypto industry looks like a bunch of idiots. I mean, the irony there has to be pretty clear, I would imagine. But listen, we all agree with him, right? It makes me feel like a fucking idiot. So it's no doubt that it would make the industry look like idiots, because I would imagine that I look like an idiot to most people that I've talked to for a very long time here. Why? Because I believed in Voyager. I believed in Vault. I believed in the model of CeFi. I never really believed in Luna necessarily, but I certainly didn't think it was going to collapse. And I obviously, as I've said, have gone on mainstream media repeatedly beating the drum for crypto in the face of evidence that we were going to see this massive contagion and shit was going to collapse and we were going to look like absolute morons. But he's saying that people used inane risk management and that they completely blew it and that all these platforms are making us look like idiots. People knew if they, and here he is talking about Luna, which I don't know, right? Which he was massively exposed to and has a tattoo. But then saying in retrospect, people knew if they paid attention, the bet they were making, the bet turned out not to work and it unraveled very quickly. That's what he said of Luna and USD's collapse. If there's a lesson learned, it was that the industry, plenty of retail investors really had very, very little concept of risk management. There was inane risk management. Okay, so he's saying here that if you looked at Luna in advance, you should have known, and it was poor risk management, but was also maybe the most overly exposed fund and person to Luna, not named Dogecoin. It's also the tattoo's is not great, honestly. Like, you're a multi-billionaire. I mean, I got the wolf thing. I wouldn't put that wolf on me. I don't know. It's a bit. It's right. It's that meme, where it's like someone's lecturing someone and it's in the mirror. That's right. So listen, I like the guy. It's just, this is a bit of cognitive dissonance to be like, yeah, everyone knew the risks. I mean, yeah, I guess. But then why'd you spend so much money? Anywho, Solana's new daily address growth outpaces other blockchains. Sol jumps. Data shows that active wallets using the popular network have grown by over 58% since the start of this year. I mean, TVL is down, so that's not that exciting. And daily active wallets have climbed, but users are down. So this is kind of a mixed bag, actually, of information about Solana here. I mean, here you go. New daily addresses refers to first-time wallets. On Solana, new users peaked at over 400,000 in May before gradually declining to 240,000 this week. These figures are a jump from December 22's 150,000 to 170,000 new users. To me, there's not really big news here, to be honest. As you dig into this, it just seems like they're kind of treading water, but at least things aren't dramatically going down. Listen, Solana has performed well. This is one of the few I had shared this sort of broadening descending wedge. It's that same thing I showed you on Doge, right? You have this sort of weird inverse head and shoulders, this shoulder here, shoulder here, shoulder here, breakout. That neckline is the same as that descending broadening wedge. The only difference is the target. But listen, this should, even just from that, this should have a target of $58 from here, $45. I wish I owned some Solana, but I'll talk about why my Solana seems to be missing. Crypto lender Vault owes $363 million to retail investors after halting withdrawals. Hey, listen, guys, this is the last news that I want to be reporting to you guys, right? As you know, Vault was a sponsor for about 3 months. We were hoping to be a very long-term sponsor. I have money that's locked up in there. I've discussed this ad nauseum. But yeah, they owe $363 million to retail investors. The good news is that's only a gap of $70 million. So the headline is a bit misleading there, because they actually have, now I'm trying to find the number. By the way, there's one guy that they owe $34 million in that. But they have $287.7 million in assets. So it's about a $70 million gap. I'm not saying that's small, but when we're looking at the billions and billions and billions in other places, it is relatively small. I'm hoping that they can manage to close that gap. As we know, Nexo has a due diligence period here where nobody else can even make an offer on Vault. Nexo, assuming that the books are correct, and this is where they're standing, very likely to buy them out, which would probably make Vault investors whole. They'd be consumed by Nexo, which has somehow thus far seemingly managed to avoid all of the contagion here. All of the contagion here. So we're hoping, listen, I'm hoping more than anyone, A, for my own funds, and B, just because obviously I supported them and believed in them, that they can make everyone whole and that they will improve there. Skybridge announces suspension of withdrawals from one of its crypto exposed funds. Yikes, dude. This was only supposed to happen to crypto degenerates, not Wall Street friends of ours. I was going to say degenerates, but Mooch is not a degenerate. We love him here. He's going to be back on one of the roundtables in the next coming weeks. I think I saw, maybe in August. But yeah, sort of a similar situation to what we've seen with the Voyagers and Celsiuses of the world, but different because there's no liquidation here. No liquidation here. Here's what they say. Our board made a decision to temporarily suspend until we can raise capital inside the fund and then make sure when people get out, they get out orderly. So they have a fund that's about 18% exposed to crypto, and that's enough for a lot of their investors to attempt to all pull out at the same time, seemingly a small bank run on this one fund. But notably, this is a bunch of things that they own that are liquid and have bought spot. They are not leveraged, so there's no concern that they're going to have those assets liquidated. But still interesting to see that this crypto contagion clearly sort of creeping over to Wall Street and major big name funds who are having to take the same sort of measures as we've seen in the crypto market to protect themselves. That's all the news that I got today. Are we rich yet? I don't know. Are we at, where are we at? We're at 23,866. Feels rich. Feels rich. I feel rich. What else you guys got to say? Goldman Party Bros, all the same. Novogratz, no exception. Hey, man, those dudes, they're rich and they're having a good time out there. Whoever inked that tattoo is inhaling paint fumes. Maybe. Chris thinks that tattoo is bad. It's National Hot Dog Day. That's cool. That's cool. Yeah, you guys don't like the tattoo. Maybe you could change it to a Puma. That'd be cool. And wear Puma shoes all the time. Fed rate hike is going to smack us down. Please discuss. I don't think so, because listen, now 0.75 is certainly priced in. 100 basis points very likely. So if that's the expectation and we still get 0.75, like I talk about all the time, guys, when we're talking about the way that news is absorbed in the market, it's not always about what the news is. It's about what the news is versus what the expectation of that news was going to be, right? Fed rate hikes now are bad if they're worse than the expectation. If you're expecting 0.5 and you get 0.75, that's bad. If you're having a 50-50 price in of 100 basis points and you actually get 0.75, that's quote unquote good news, even though it's a big rate hike, right? So now it's all about the narrative and what happens relative to that narrative. And of course, we don't even get a rate hike in August. So it's going to be whatever happens here in July. Now, anecdotally, gas prices at the pump in the United States certainly are way down. Which shows us obviously that CPI is a bit of a lagging indicator, right? It's based on what was happening weeks ago and not what's happening now. So if these oil prices really are coming down, gas prices, and there are signals that, inflation could be topping, maybe we get either the expected rate hike and then something smaller down the road. Very hard to project. I mean, there's so many intertwined factors that go into what the Fed decides to do. And we obviously simplify it here. But, love from the Stonehouse, Scott and fam. What's up, Dougie? Tell Bella I said hi. I don't know what the Stonehouse is, but sounds awesome. Sounds amazing. What else we got? Yeah, where's Gary Juno? No, hasn't even asked me a question yet today. How's 100% priced in? It's gone up since the high CPI came in. Just a pump before cashing out around the Fed meeting. No, if the expectation went to like 78 or 80% of 100%. Basis points of 100 basis points. That means it's priced. That's when I say priced in, I'm saying it's what's expected. So then you start to talk about what happens versus what is expected. Even Professor Steve Henke said we've reached peak inflation. Listen, I thought we might have reached peak inflation in the mid 8s. I thought we would see like a 7.8 print 2 months ago or something. So obviously we're all just guessing here. I'm wrong a lot. That's what I've learned here. That's what I've learned a lot here. Oh, look, we got a new banner down there. Hit the like button. I wasn't even paying attention. Have you ever, that's like Jon Stewart in Half Baked. Have you ever played golf on weed? You ever read a book on weed? No, I've never played golf in Canada. I have not. So yeah, guys, listen, I'll be back tomorrow. We're going to have a roundtable. I don't even know who the guests are. I know Mike Alfred will be one of them. I had seen. Let me see what I got. Josh Frank. Oh, yeah, it's going to be fun tomorrow. We have a roundtable tomorrow, and then I'm going to be off on Friday. So you got to show up. Is it possible they only hike 50? I would be very, very surprised. Possible. Yeah. Possible. Just glad I got some ETH at $900. You are a giga Chad, my friend. Yeah. I bought Bitcoin at 18,000. Right now, my funds are largely locked up. So welcome to the world. Anyways, guys, that is all that I have for you today. As it says right now, hit the like thing and do the like stuff. It's going that way. Hit the like button. Do it. Don't be scared to do it. Feels like you're scared to do it. You shouldn't be scared to do it. Anyways, I will talk to you guys tomorrow. We will, one way or another, have an epic roundtable on tap for you guys. Thanks once again to Jurrien Timmer, and for all of you for always showing up. Peace out, friends.
That's dope.